Minasan, konnichiwa. Samurai Engineer Desu. In this lesson, we will compare the accounting for long-lived assets under Gaap and IFRS. So let's first take a look at similarities. The definition for plant assets for both IFRS and Gaap is essentially the same. Both IFRS and Gaap follow the historical cost principle when accounting for property, plant, and equipment at date of acquisition. Cost consists of expenditures necessary to acquire the assets and make it ready for intended use. So make it ready for intended use. For example, in our intangible asset, we have legal fees. To make the intangible asset ready for our use, the transfer of rights is now cleanly at our hands. It includes expenditures of research and development, legal fees, processing fees, registration fees, okay, and so on. So that is the initial value of our property, of our asset. Okay? And Gaap and IFRS both follow those principles. Under both IFRS and Gaap, interest costs incurred during construction are capitalized. That is what we mean by that. Just what I have explained a while ago. That is what is meant by capitalized. Recently, IFRS converged to Gaap requirements in this area. So, just recently, so interest costs, they may have some interest cost in retaining, in handling that for example, that equipment is from loan. No. So that interest is also capitalized. Okay, that is in principle about right. In my opinion, in my personal opinion, I am not a regulator. I am not the authority having jurisdiction, but in my personal view, it's just about right. IFRS also views depreciation as allocation of cost over an asset's useful life. IFRS permits the same depreciation method, straight line, accelerated, and units of activity as Gaap. But there are three acceptable depreciation shown here, but there might be other. They are only shown here as being accepted by Gaap and IFRS specifically. They may accept other because there are so many depreciation methods. Okay? Under both Gaap and IFRS, changes in depreciation method used in changes in useful life are handled in current and future periods. Prior periods are not affected. Depreciation method used in changes in useful life handled in the current and future. Just use the what? The book value. Book value, that is your reference point in what? Again, appropriating future and current depreciation method and useful life. Gaap recently conformed to international standards in accounting for changes in depreciation methods. So now they are similar. So, accounting for subsequent expenditures such as ordinary repairs and additions are essentially the same under IFRS and Gaap. So expenses, repairs, addition of components. Okay? The accounting for plant asset disposal is essentially the same under IFRS and Gaap. So when we have the word essentially, they are the same but with small differences. Initial cost to acquire natural resources are essentially the same under IFRS and Gaap. Natural resources. The definition of intangible assets is essentially the same under IFRS and Gaap. So they are essentially the same. Another similarity is the accounting for exchanges of non-monetary assets as recently conversed between IFRS and Gaap. Gaap now requires the gains on exchanges of non-monetary assets be recognized if the exchange has commercial substance. This is the same framework used in IFRS. So, what we shown in this chapter as an example of reporting of journal entry. This is what we are talking as a similarity between Gaap and IFRS. What about their differences? IFRS uses the term residual value rather than salvage value. So only the term. Okay? So salvage value is the last amount, the scrap value. Okay? So the scrap value for IFRS, residual value. Scrap value is the salvage value for Gaap. Terminology. IFRS allows companies to revalue plant assets to fair value at the reporting date. Companies that choose to use the revaluation framework must follow revaluation procedure. If revaluation is used, it must be applied to all assets in a class of assets. Assets that are experiencing rapid price changes must be revalued on an annual basis. Otherwise, less frequent revaluation is acceptable. Rapid. There are assets that properties sometimes change price very rapidly. Okay. So that is IFRS and not Gaap. IFRS requires component depreciation. Component depreciation specifies that any significant parts of a depreciable asset that have different estimated useful life should be separately depreciated. Component depreciation is allowed under Gaap but is seldom used. Very particular, for example, those components for repairs and maintenance. That is in your stock room. That is in your stock room for future repairs and maintenance. Okay? Future repairs and maintenance of your long-lived assets. So, that is a difference. Seldom used in Gaap. They have separate depreciation, so very hard to do this. Very hard. Particularly when the parts of the components being used is already attached to the, you still have to, so that is not an engineering justification, but purely accounting justification. Okay. As in Gaap, under IFRS, the cost associated with research and development are segregated into two components. Costs in the research phase are always expense under both IFRS and GAAP. Under IFRS, however, costs in the development phase are capitalized as development cost once technological feasibility is achieved. There's a clear difference. Okay, research and development, cost in research, always expense under both their expenses. Expense. They are divided into two components. However, the development phase is capitalized under IFRS. So, not in GAAP. Okay? So, development. Okay? They are the same in research. Okay. And IFRS permits revaluation of intangible assets except for goodwill. Revaluation is okay. GAAP prohibits revaluation of intangible assets. So, intangible asset is already fixed in GAAP. Totally, I think revaluation is totally messy. It will open so much area for manipulation. Good manipulation, bad manipulation, depends on the perspective, but it will open so much for manipulation that the public will not be able to comprehend the real value. I might be wrong with this because fair market is actually the public's opinion on the value of that one, but fair market value, who is the source that you are going to, in reality, who is your source? How can you say that that is the public's opinion on the value of that? Who said that? Fair market value. Okay, so that is very good in theory, but in practice, that is an open gate for manipulation, including bad manipulation strategy. Okay, they have identified the project that we consider expanded recognition of internally generated intangible assets. IFRS permits more recognition of intangibles compared to GAAP. That is the current situation. Okay, so let us evaluate our learnings for this chapter. Which of the following statement is correct? A. Both IFRS and GAAP permit evaluation of property, plant and equipment, and intangible assets, except for goodwill. B. IFRS permits revaluation of property, plant and equipment, and intangible assets, except for goodwill. Both IFRS and GAAP permit revaluation of property, plant and equipment, but not intangible assets. GAAP permits revaluation of property, plant and equipment, but not intangible assets. What is the correct? The correct answer is, of course, letter B. IFRS permits revaluation of property, plant, equipment, and intangible assets. Question number 2. Research and development costs are expensed under GAAP, B. Expensed under IFRS, C. Expensed under both GAAP and IFRS. None of the above. So the answer is letter A. That is an expense. because we are talking of research and also the development. The development is capitalized cost in IFRS. Okay, so this ends our last lesson for chapter number 9. Again, this is Dr. Rippy, preaching engineering for nation building.